morning, good afternoon, good evening, yWhales, wherever you are today. So today is September 13th, 2022. Bitcoin is hovering right around $20,000 yet again. It's kind of hard to believe, coming from last year's bull when people just never believed like 30K was a floor. Like if we ever saw 30 again, like that was going to be huge. And quite often we're dipping down into the teens, lately. And I think we got quite a ways to go. A little bit of that I'd say is that we are literally hours away from the Ethereum merge, the conversion of proof of work to proof of stake. In fact, I'm looking right here. We've got 8,274, 8,273 blocks as it continually rolls through. So literally about the guess right now is about 32 hours away. Speeds up, slows down a little bit, just depending on where the chain's moving. But most importantly, this is one of those ones that nobody knows. Is it buy on the rumor, sell on the news, or vice versa? Like it truly is chaos. Are the dApps going to work? It seems like technically everything is going to be there. But more so, there's just a lot of fear. In fact, I'd say a lot of fear in the water, and people are kind of uncertain. So what you have is a very tepid climate right now to retail investors, especially. Institutions aren't even really having conversations. But that doesn't mean much for the entrepreneurs. That doesn't mean much for the people that are building in the space. And I've got Hamosi here today with me, and from Diamond Swap, and we're going to talk about his project here in a couple minutes. But I think what's really important to see is that we're now seeing the evolution of DeFi. We're seeing the evolution of a lot of things that were conceptually like, can we even do A, B, and C? Well, we can do A, B, and C. In fact, we can do that very well. And what does that look like now to take that a few steps further? So before we dive into that, as we kind of sit here, Hamosi, let's dive into kind of where you came from and kind of your first experience with cryptocurrencies or anything like that, and we'll go from there.
Sure. Well, firstly, thanks for having me. This is fantastic. So, a bit of my background. From the age of 24, I've always been fascinated in startups, and in particular, trying to find businesses that might have been running for a while, but just haven't had a focused founder or focused director. And so when I was 24, it was the first purchase of a business I've ever made. It was a tourism business here in New Zealand, down in Wanaka. And it wasn't the owner's focus. He just did it for a bit of fun, but it was a fantastic opportunity. So I picked that up, managed to get the offer secured, and there was enough stock to create a separate location altogether. So I split the assets, created a second location, drove it as hard as I could for a couple of years, and then sold that. And that was my first taste of exiting a business that I created and grew, and that was really exciting. Beyond that, I got into software development. Again, it was really just about finding a problem in the market that retailers were facing. And at this time, there were thousands of different loyalty programs in the market, and we needed to consolidate all of those loyalty programs into one simple software that's integrated into everyone's existing EFTPOS debit or credit cards. And so we work with the banks to develop a software to integrate into those payment gateways, which means you don't need to carry a card with you. It basically catches the transaction, facilitates the reward piece, and then you go back into the store and you just use a single card for a transaction. That was really exciting too, and that opened me up to the world of possibility in terms of what can be done with software. And I guess after that, I've only really recently got into crypto. So it was about October last year, just had the tail end of the big Shiba Inu push, and managed to catch the tail end of that. And it was just fascinating. The whole space was incredible. And so because in the banking card software that we developed, we're effectively creating a digital currency when anyone transacted through the retail system. And that digital currency could be used back in store. I'd heard about Bitcoin back in 2007, 2008, and intrigued by it because of what we were doing. And so it took me, I don't know, what is that, another 12, 13, 14 years to get into it finally. And once I was in it, it's been a fantastic experience because of the community that's here. Like, this is probably a segue into, I guess, where we are now, but I wanted to dive into crypto really deeply because when you're an entrepreneur and you want to start these businesses, you want to surround yourself with a huge amount of talent and people who are on the same page and they want to drive and create things and solve problems. And what I experienced in the crypto environment was it was just this giant community of people that wanted to do the same thing. And so the resources that were available through developers was just at your fingertips. So it was almost like moving to Silicon Valley or some sort of hub where you're connected with all these people that want to do cool stuff. And it just made things a whole lot easier to get started. So, that's a little bit of my background and to where I got into crypto and why I've fallen in love with this space.
I love that. And you're still early. Like, I mean, I'm gonna say early. This, as someone who's been around the space for a long time. You're still very early. You know that where there's I say the stat all the time. There's less than 1.5 million Ethereum wallet addresses with one or more ETH in it. Where there's less than 30,000 NFT holders. People that have purchased NFTs in the last 90 days. And so we're talking like tiny little numbers, and we're still trying to figure out what the technology is and what it isn't. And what is just kind of a rudimentary, kind of just conversion that no one cares about, and what is actually important and to have kind of that digital asset, on chain. So there's a lot of things here. And so I love the concept of you already understand, the way the banks work and the way retailers work and kind of loyalty point systems. And I'm sure for you, you're going, oh God, like, why did I build all this over here? Had I been spending all the time over here on the blockchain, coulda, woulda, shoulda, all sorts of things. But the reality is that you had a successful project and it worked and it ran fine. There's nothing wrong with Web 1 and Web 2. It works very, very, very well. It's extremely efficient. Blockchain needs to mature in a little ways. So I think that you're kind of in the same sense going, what do I make? What do I build? How do I convert these things? Everything else. So fabulous story. That all being said, you're a mature entrepreneur, you're a mature investor and software geek in a variety of ways. So describe to me really quickly, what the problem you're trying to solve with Diamond Swap is, and then we'll I know you can show us a demo of that here shortly as well.
Yeah, no problem. Well, Diamond Swap is an OTC platform. It's an exchange effectively that allows user-generated token pools for slippage-free trading. And so I can probably explain that in context based on my own experience and why we developed it. So again, last year, I was lucky enough to pick a few good tokens, and I managed to establish a large position in one or two of them. And when I went to liquidate them, the slippage was like, it was a low liquidity token. And I think the slippage ended up being about 27% of my trade. And I was like, okay, well, that's immediately losing 27% of my trade there. That's not ideal. And so I looked into what opportunities there were to do an OTC trade, because it had a significant amount of buy volume. So me selling wasn't really an issue. In this particular token, it was a major issue about the slippage and the amount of loss I would experience in this trade. And so I looked at the OTC platforms that were out there, and you can find one-to-one trade if you know who the recipient is. But there wasn't really a marketplace that would allow me to post my tokens and the listing of my tokens on a publicly available marketplace that anyone could come across and see and buy portions of or buy the full amount. And I guess what you said a few minutes ago is that we're still early. And being early creates a huge amount of opportunity, because you get to create the solution to the problems that are in your face. And so that's effectively what we did with Diamond Swap. We created a marketplace that allows anyone to list their tokens and allow buyers to pick them up slippage free.
And it's such a, simplistic concept on its face. It's like, hey, there's buyers and sellers. Wouldn't it be great if there was like a Craigslist of sorts that people
exactly.
could post what they want, and and we're really you've been around for a long time in the tech space, and so I always refer to Web 3 as closer to Web 1 than Web 2. Web 2 is an evolution of, we're really starting the clock all the way back over with Web 3. And so the core concept is you can make a better mousetrap in Web 3 or make a similar mousetrap in Web 3. And it's worth $1 billion, because quite simply, there was no other mousetrap of which anyone else can use.
Exactly.
And I'm familiar with a number of other OTC platforms that are out there. And but they're all relatively simplistic. And I don't know of any of them that are in heavy use. I know Toke has some. I know yWhales, you played around with it. Proton's got theirs. But yeah, it's absolutely fabulous, to hear that you're going, look, there's a very simplistic problem in front of us. This is going to be a growing need of which people have, and you have the technical savvy of which to have it. So I'd love to kind of run through and look at what this is, because I do have a lot of questions about, and a lot of it is why. There's a lot of DeFi platforms out there. There's a lot of chains out there. And so, yeah, if we'll get a second for you to get your thing loaded up, and let's walk through it, and I'll try to my best to follow along.
So I'm already logged in, so that process is done. So effectively there's the buy and sell piece. So as a buyer, I can search any token address and it'll pop up the current details of that particular token, what the market cap is, the current liquidity, how it's doing in the market, but more importantly, what token listings are available from those holders. So as I said earlier, Diamond Swap is an OTC platform for holder-generated token pools. Now, here, there are a couple of ways you can do it. So if you are looking for a one-to-one trade, that's no problem. You can either have the recipient in mind, or you can just post it to the open marketplace. Somebody needs to come across and purchase the full amount. Now, the beauty of what we're doing around the slippage-free trading element is because there's so much to be gained as a result of zero slippage, you can start to offer some pretty lucrative discounts. So you can offer 5%, 12%, 7%, whatever suits you, and you're typically going to end up with more anyway after the trade is done. So the other process is if you want to buy from a pool. So this is where you have a large whale, they have a significant holding, and so it's very unlikely that a single whale is going to come along and buy that full amount. Plus, the project is probably more interested in that single whale selling to many buyers for the distribution that will occur at the very end, the more healthy distribution. So I can buy from pool, see that the total pool remaining is 900 billion. I can see that there's a discount available, and I can just click the amount of tokens that I want to buy from that pool, hit buy, and that goes through no problem at all. Now, the cool thing about this is really the opportunity that sellers have around stipulating what they want to offer as a package. So I'll use diamonds as an example. So I've used ETH. So whatever network that token is on will be the native token that is traded for. So my diamonds will be traded for Ethereum. If my token was on the BSC network, it would be traded for BNB. So this is where I enter the total balance of tokens that I'm looking to sell. And this down here is where the sell options pop up. So as we mentioned before, I can sell one-to-one. And if I have a specific address that I want to sell to, I simply just enter the wallet address in there, stipulate whether there is going to be vesting for this particular holder that is coming on board. Now, this is particularly relevant for project owners that want to incentivize influencers to come on board. They can offer a discount, and they can also stipulate a vesting period. Typically, that's going to reflect the period of which that influencer has been happy to support the token. So that's
interesting. So so the vesting period's a very interesting one. Is that fully built out, or is it, what happens when it goes in there?
Yeah, that's probably one of the key selling components for us. It really gives us an edge. So in terms of let me go back to, excuse me, 1 second, vesting. So I want to do vesting for these guys. Excuse me 1 second. I'll just bring that screen up again. But it's really around the influencer piece. So if you want to say, okay, look, I want to stipulate that these tokens are going to vest over a period of 12 months, I can do that, no problem at all. So
that's okay. Listen,
even
Steve Jobs had issues with his demos. Yeah. I think you have to turn on the specific buyer. It seemed like once you turned on that.
Yeah, that's address. Right. Yeah, now it seems to be frozen. Apologies for this, but
that's okay. Well, yeah, this is Web3. Like, we're still trying to figure this stuff out. The Web2 stuff is usually what breaks, not the Web3 stuff.
Yeah, well, this is just a demo. Unfortunately, I should have brought up the actual site. But the very cool thing about what we're doing here is that, along with, as you saw in the previous demo when I was showing through, when you are allocating tokens to a particular recipient, you can enter the wallet address. But the wallet address I'll just stop sharing and then reshare it and see if that works. But the wallet address for particular influencers that you want to get on board is not always known. And this creates a significant challenge for project owners. And what they typically have to do is they have to direct message these influencers and say, hey, look, I'm going to start this protocol or this token. I'd really love to have you involved. I'm prepared to offer you an incentive by offering you either a discount or some sort of longer term benefit. But before they launch, they have to rely on that influencers to get back to them. And that's really challenging when that influencer is receiving potentially up to 100 direct messages a day. And so what we've built out is, as well as entering the wallet address if it's known, is you can actually allocate to a Twitter handle. And this is super exciting because it makes life a lot easier for the influencer. They don't have to respond to the direct message at the very beginning. And the project owner can launch without even having the confirmation from the influencer that they want to be on board. So they can allocate that piece to the influencer. They can allocate it to the Twitter handle. The influencer authenticates that they are the owner of that Twitter handle. And then they can filter all their offers based on how well they're doing in the market before they accept that pre-sale package. So super exciting.
It's really an interesting concept and very simplistic. We deal with this all the time. There's, if you're kind of, pre-token, if you're a VC, like myself, there's a lot of times we're investing pre-token. So I love that. And again, I know you're still building this out. But to me, that's just a really fascinating feature right off the bat.
Yeah. And this is probably something that we've kept sort of up our sleeve. The market don't know that we've built this out, but we've been talking to a lot of influencers, and there's just a significant pain for them is that they miss a lot of opportunity purely because they've just got too many direct messages to respond to by a deadline. So when you've got a big pain, in particular with software development, it creates a really exciting opportunity once you can solve it. So we can try and share again. I wonder if the glitch has passed, but what do you think?
Okay. Like I said, we totally understand the concept behind it, and
brilliant.
Yeah. So let's kind of talk a little bit about roadmap and where you guys are at today. Cause like you said, you're working on a demo and you've got, kind of I looked on your site and you've kind of got like a staggered rollout of things coming. So where are you at in that process today?
Yeah, so we're very nearly finished the full build out of our tech. And so we'll be finished by this Friday, we're predicting. And that's where we engage with the auditors to complete the audit on the security audit on the front end and the back end to ensure that there are no vulnerabilities before we go public. And that process is predicted to take about 2 weeks. So we're at an extremely exciting phase of our project. So we're looking to launch to the public in October, hopefully early October, and then just let it go. There's a huge amount of demand for our product already, which is fantastic. And we just need to make sure that, the user experience is as intuitive as possible.
Which audit firm did you use?
So we're actually using Solidity Finance for one of them. And we're also using one that has moved from a Web 2 to Web 3 recently. And they're really cool.
There's a massive drought. We talk quite a bit with Zokyo and Trail of Bits. Cool. So I'm always curious, which one of them run out, and sometimes it's a third party too as well. But there's as you very well know at this point, there's a drought of code auditors that are worth their salt to be able to deal with these things. And the reason that I bring that up is because, and I applaud you for making sure that you are having your code audited by a third party, because we've all seen enough hacks. I mean, there's not every week. There's multiple bridges that are drained of, tens to hundreds of millions of dollars. There's a lot of liquidity pools that do have issues. And so, you are dealing with a very complex project. People are putting your faith in you. And just like any other bank would, I applaud you guys for taking that extra step. And it's very expensive to do so as well. So
absolutely.
That's awesome.
It's critical for us. I mean, because any exploit, could be incredibly damaging. I've got a friend who started a swap protocol, and they were, it was $30 million in daily volume. And then I think they got hacked on their hosting side. I think it might have been GoDaddy or something like that, like a vulnerability that just came out of nowhere. And it's really damaged their growth, as you can imagine. So it's critical that, one, we build it in a way that the ETH stored in the contract cannot be accessed by anybody. But two, we get those other auditing companies just to scale through the code one by one, line by line. make sure it's working.
Yeah, no, we've seen some of the largest, hacks are done by, Discord, or Telegram
right.
or something else. It has nothing to do with the Web3 or anything else. Just social, piracy.
Exactly.
And so that's a really tough deal. So taking, a step back, Hamoso, when you guys are building this and you're kind of thinking about your clients, how much did you guys build in a vacuum, and how much were you basing this on real world kind of feedback and usage?
Yeah, good question. So we're lucky enough to have a pretty big team for a startup. Like we've got 4 developers. We've got a total team of 9. And so we just basically started the initial brief, the development brief, on our own experience. And so we tried to pull apart all the OTC platforms that are out there and why they perhaps weren't generating the volume that they could do that we thought they could. And then we just honed in on the outcomes that we thought could really help. And so along the way, because we launched a V1 token in March before we started building it, we've had an incredible database of holders to help us through each step of the way. And hey, guys, here is the concept. Here is how we're going to narrow down the intuitive user interface. And this is how we're going to hit it. What do you guys think? And the feedback has been fantastic the whole way through. I think we had about 1,200 holders for V1. And the engagement, once they heard what we were building, was fantastic. And it certainly helped us craft what we're creating and launching next month.
That's awesome. So you guys are launching next month. You're going into this. Do you have any, large partners that you guys are working with, or are you just kind of starting small and letting it grow from grassroots perspective?
Yeah. So our key, I guess, sales strategy or marketing strategy is to influence the influencers because of the piece that we've built. And so we're lucky enough to have some fantastic CT influencers that are on board. Collectively, they have a following of over 1 million followers on CT. And so we'll be really getting them to drive the product and the launch of the product through their networks, because the key thing is that because you are transferring tokens into an escrow to then buy or swap or whatever it might be through our platform, trust is critical. And so we have to find trusted brands in the industry to launch our brand off. And so we're super lucky that we've had really high engagement from some of the key influencers. And they'll be pushing this. They'll be asking their project owners and anyone following them, if you're looking to get me on board with your project, please make the offer through Diamond Swap, and that would just generate that initial volume for us, which is great.
That's awesome. When you think about something like OTC, from a TradFi perspective, it's just one bullet point of dozens and dozens of other bullet points that a traditional bank or brokerage would offer. Like, of course, this is just something they do. But with as early as we are and kind of trying to work through the problems, I think you have a very innovative solution compared to a number of the other OTCs that I've seen, because like I said, just the kind of holdback that you have is absolutely something that I have not seen before. And then kind of the multi-chain side of this, where you're being very chain agnostic. And I think that's a thesis and a thought process that I'm sure was a tough pill to swallow early on, because not only are you going to develop this once, but you're going to replicate it over and over and over and over and over again if you're going to have that thesis. How did what was your thought on the chain agnostics side of things?
So we're compatible on any EVM chain, and so luckily we're going to be launching on any EVM chain just purely because of the dynamics of how that is available to us to do. And that's something that is super exciting. We're not cross-chain, and we might look to become cross-chain in the future. So you can trade your Ethereum tokens with a BSC token. It might be the case. But at the moment, we're just focused on keeping it multi-chain. But something that you touched on earlier is around the vesting period. And I guess the biggest challenge for us is that there are so many pains to solve. And so the question for us is, how do you solve so many pains in a single protocol or single interface that becomes intuitive, like it's been out there forever? And so speaking of the pain related to the vesting that we've built, many pre-sale investors get involved, and they get involved at a discount rate, which is really exciting, like you touched on earlier. But it actually can become a really big disadvantage because you are locked in. You cannot sell your unvested tokens until they become released to you. And we see this as a significant pain because a lot of these prices of tokens skyrocket but you're locked in. You can't realize the value until later down the track. And by that time, potentially the value has diminished significantly. So we've built the ability to sell unvested tokens through our platform. And that is getting a lot of people who are really heavily investing in pre-sales excited because they're not locked in. The vesting schedule, because it's all built within our protocol, follows the tokens to the new owner. And so, yeah, that part is something that we'll look to
yeah, and you know what? This is DeFi. This is what it's exactly for. This is, forget your rules. This is what we're going to make happen. And I think that's great. I mean, there's plenty of people right now with staked ETH that can sell your staked ETH through some DeFi wizardry as well. So it makes sense to kind of continue to kind of, pull apart these pieces and find points of liquidity, because that can be the difference between someone selling your project at a relative discount. You said before, someone can say, hey, 10, 12% off. That's a big difference between someone saying, I need liquidity now, and I just need to dump these things because I'm about ready to get liquidated over here. So this is an asset I don't care about as much as something over here. And so it really, a lot of the reasons why we have so much volatility, and I think that you can understand this, and the viewers probably as well, so much volatility in this asset class is because there are so many people using obscene amounts of leverage in very unhealthy ways. And there's no regulation or security protocols to kind of stop the market from crashing. And so I think that anything you can do, and is this going to solve 100% of the problem? No. But I always say if you can take 10 or 20% off of that, it's a huge amount that suddenly it releases some of the volatility that may happen. So very, very cool concept.
Yeah, thank you. Yeah, that is very exciting. I mean, when you're talking about that pain of needing to liquidate quickly, because it is slippage free, you can actually incentivize buyers to make that liquidation happen a lot faster. And that's something that we're really looking forward to watching.
That's awesome. So, you guys are really peer to peer, and that's what you're designed to be. There are liquidity pools from individuals, but you're not trying to compete with the Aves and the pancake swaps that list anything and everything. But this is a place where I don't want to brand it, but this is really again, this is the users are setting the rules. It's just a marketplace. I'm trying to avoid using any Web 1, Web 2 companies, because I think that none of them really do it justice. But it really is, you're creating a private marketplace, semi-private marketplace, because it's open. You can do it privately, and I think that's fabulous. Where do your main contracts live? Obviously there's some main tech. Is a lot of that Web 2 still, or are you kind of dabbling back and forth?
It's all Web3. So it's all built in Solidity, all of our contracts. So there's the core contracts that handles the protocol and the rules assigned to it. But then we've built a separate contract for each function. So it might be discounts or vesting. And it just keeps it a lot cleaner, and it makes it less vulnerable to any attacks as well. We're lucky enough to keep it as decentralized as possible. And our actual incorporated company is running out of BVI. So there's some benefits there too. So yeah, we're doing our best to keep everything Web3 as possible.
It's fabulous. So, as I kind of just look through, and I'm kind of sorting through your deck right now, which again, there's a lot of things here. Where's kind of Where's the really rush going to come? Because there's a lot of people, and I'd say the main of your business of what you need to market, and you're a marketing guy, you've done this quite a bit. How do you attract enough people early on to what is kind of a small niche product today? I mean, even the big ones, Aave and all that stuff. I mean, they're so far down during this bear. What's your kind of target client? I'd say over the next few months.
Well, it's certainly in the meme coins. So any coins that have low liquidity, that's the issue that we are solving, is when you buy early, you're lucky enough to buy early. You have a significant stake in that token, but when you go to look to liquidate, you have to either scale out, that requires the buy volume to still be there, or you sell and you really damage the chart, and you pay the slippage on top of any tax that particular coin has charged as well. So in terms of how we scale this out, we certainly don't have the mindset where if you build it, they will come. And I'm seeing other protocols that are coming onto the market now, and feels a little bit like they're taking that stance, but it's certainly not the case. There's quite a big education process, even though it's a really simple concept. We really need to ensure that we are staging our development and releasing the tech in a way that can drive volume to the right places early. And so, as I mentioned before, our launch plan is around influencing the influencers. So getting project owners to finally get connected to the influencers on Twitter, make pre-sale offers to those influencers, and no doubt the ones that 10x or 100x will be sold through Diamond Swap. And that's fantastic, because anything that you give to an influencer must be sold via Diamond Swap to protect the chart. And so that's the initial target market, really.
So these and again, just correct me if I'm wrong, these trades are not registered by the oracles. So if someone says, hey, I just want to sell my ETH for $100 a coin to this specific address, it's going to go through and do that, because that's what, the seller said and the buyer agreed. So price becomes a reference point, but it's no longer relevant, because that trade isn't going to, the Coinbase isn't going to suddenly show a trade no matter how large it is with an OTC, correct?
Exactly right. Yeah, it actually transacts as a transfer, so a wallet to wallet transfer. And so
that was my question. What does it look like on chain, or because now exactly. I always worry about what the nerds are going to do, and the nerds are going to go, oh, okay, there's things moving here. Are they able to see that there was a transfer, or are they able to see there's a transfer and here are the coins that were transferred in the price?
Yes, so they will. So everything will be on chain. So it'll just look like a wallet to wallet transfer on chain. And so we're just using the oracles for price reflection. So we know that if a token price has mooned after someone has listed a token, the price of that listing reflects the current market price. And that's the other issue that we see with OTC protocols or platforms, is they lock in the price at the time of the listing, because they have to try and find a value and set it in place to then sell it to another buyer. But with our platform, it's a fluid market price. So when you list your tokens, if the price someone sold through the liquidity pool and therefore there's a big price dip, that package or the price of that package on Diamond Swap is going to reflect that as well. So we're only really using the oracles to ensure that the market price remains consistent.
Yeah. And for those people listening, this makes a lot of sense for exactly your target market, which is low liquidity, founders projects, meaning that, hey, I have millions and millions of these coins, and they could be worth millions and millions of dollars, at the current strike price. But there's a buyer pool of, tens of thousands of dollars. And so quite simply, if someone needs liquidity, and there's a lot of times that there's founders and teams that need liquidity, that would like to offer that discount, and I get offered discounted coins constantly. And it's a relatively, kind of commonality theme that happens. But this is a tool of which nobody has to, talk me through it. They can just say, hey, go here, and this is what we're offering and why. So I think this is a very, very interesting concept.
Thanks.
Have you had any, major pushback of people? Because OTC I know is not frowned upon, but it kind of the Oracle people get concerned that things are happening on the back end, even though this happens every single day.
Sure. Yeah. I mean, I haven't had any pushback yet. If there was pushback, it would have come from the existing swaps that go through the liquidity pools, so the uni swaps or pancake swaps, etc. So we have actually factored in a reseller transaction for them. So they're typically charging 0.25% for every transaction that goes through. So there was hesitance for them to support us, but because we charge a 2% transaction fee, we've actually factored in a reseller fee that is more than what they're currently making through liquidity pools. So they're excited to, work with us and perhaps make our little Diamond Swap widget available through their dApps, so their holders can compare basically the ETH that they'll generate through a trade without slippage and then with slippage immediately. So that's where there's been a little bit of pushback, but we've just tweaked our fee to ensure that they're factored in.
Yeah, and there's going to be a gazillion tweaks. And I like the way you built your system, which is very modular, it sounds like. Instead of like, here's one massive main contract that lives lives and dies by everything. There's lots of little modular contracts that you can plug in, plug out, upgrade, and swap out as well.
Exactly.
So I think that's a very smart play. It just sounds natural that NFTs are eventually going to make their way into your platform. What's the thoughts on that?
Yep. So we've built that out, but we're not going to be releasing it for launch because there's just so much to take in, even though it's a very simple concept.
It's not a simple concept. There's so many fake NFT projects, and it's really hard to do the validation on those.
That's right. Yeah, that's right. So we're going to be launching just with the token OTC platform. Discounts, vesting, sending to influencers, all these pieces of the puzzle will be available on launch, but we will be launching an OTC NFT swap sometime in the future, probably by Christmas, but we just want to make sure that we get that initial volume through the platform, people trusting it and enjoying it before we go ahead and do that.
Fabulous. And so you have a token, you've got diamonds. And I never worry about where these things are going price wise. And I hope they go to the moon. I wish you the best of luck. Mm-hmm. But to find the utility and kind of, what's the reason that someone would want to buy or hold or use diamond, tokens?
Good question. Yeah. So we pass all of our profits back to holders. And that's the core reason. So we've built a staking platform that allows people to stake their V2 tokens for what we call X diamonds. And they generate ETH. So if we generate fees on the BSC network, we bridge them over to ETH, and then we just use all of our profits and put them into the dividends wallet, and that disperses that ETH to holders based on their proportional holding. So that's super exciting. So there's going to be a sort of like a passive income available here once we generate some significant volume and pass that profit back to holders. But that is the key, that we want to make this as decentralized as possible and let people share the pie.
I love the concept. I love the utility, and I love the idea of there. I'm going to guess that you're not interested in stepping foot in the United States anytime soon.
No, well, I mean, our platform will be available in the States, but we've incorporated in BVI for a reason. It's a lot easier to run the commercial side of things out of British Virgin Islands compared to the States. So, yeah.
There's, like I said, I don't want to turning this into securities talk weekly, but, there's, this is the problem. And I think this is the problem with the overall state of the entire industry. Web3 is that regulations are so far behind the technology already. And I see a lot of projects like yours that can provide a lot of good, that can provide a lot of utility value, as well as, honestly, think about the number of people that could make quite a significant amount of money just helping to provide liquidity to some of these projects. And there's a lot of good that can happen from it. The unfortunate thing is that you have to worry about, like, hey, even if I wanted to pay taxes, there's no way for me to pay taxes on this. There's no way for me to recognize this because, you're kind of so far out ahead of, especially US and European regulations on what you guys are doing. Technology wise, it's easy.
Absolutely.
The lawyers are always the tough ones.
That's right. And we have wanted to ensure that we partner with the right legal firm. And so we're actually partnering, we're working with a legal firm in New Zealand who have been responsible for the NZDT currency that's currently on testnet and so the legalities that flow through that. So we wanted to make sure that we didn't have to worry about that side because we've, working with lawyers that are fully savvy and experienced in this space. It's quite complex.
That's awesome. And then just can you walk me through the tokenomics? Because I always just love hearing about this from the founder's perspective. How many coins and what's the, especially with staking and everything else, how do you guys manage that?
Yeah, sure. Yeah, so there'll be a total supply of a trillion tokens. There is a 5% buy and sell tax through liquidity pool. And in terms of the staking, you can stake for any period of time and unstake whenever you like, but there is a 7-day cooldown period before you can then claim out your native tokens to sell through the liquidity pool. So we're just trying to keep it as simple as possible. So a straight 5 and 5. But what we will do as the volume is generated through the protocol and therefore the revenue that we generate, we will slowly but surely turn that actual tokenomics into a 0 tax. As the income from the platform supplements the tax revenue that we generate through the token.
Yeah, it's fine. So I'm going to guess that it's capped. You're not with a trillion. You don't need any more of these.
No, that's right. It's capped. You cannot mint them, and you can't even change the tax above 5%. So that is the ceiling. And we're
which is the way which is really the way it should be. I think that if you want to burn them, hey, that's up to you. It at least goes in the right direction. I think there's too many projects, and you're relatively new to the whole cryptocurrency side of things. And it's so whenever I'm looking at a project, that's the first thing I want to know: is this capped? Is this open? And the ones that are open, generally, I tend, especially younger, I tend to shy away from, because that's where you can get in a lot of trouble. That's where it's like, hey, it's a year later. We messed up on our tokenomics. We messed up on our drop. We're just going to go ahead and add X number of more. That's a dynamic change. That's why I left the stock market. I love the stock market because you don't know, you can have all the metrics in front of you, read the deals. Here's this, do all the due diligence. And then, 2 days, after you get into it, they've issued more stock. They've diluted you down. They've done these types of things. So I really applaud you for, wanting, you guys are true, DeFi degens. You're really looking at this from the correct way of the space, and you're still relatively new. Welcome to your first bear market in crypto winter.
Yeah, thanks. Yeah, it's been a wild ride. I mean, I think you hit the nail on the head. The reason why I love this space so much is because I think in the, the macro environment, I think the financial system is broken. And, the ability to print money and, I can't see that playing out, long term and having positive effects. And so the beauty around cryptocurrency, and even though we're still trying to figure our way around it and where the benefit is and how to use it, is the fixed supply and the transparency of every transaction on the blockchain. There's something really special about that. And so in terms of the tokenomics, we need to play along those lines. There's certainly a fixed supply. And we do have a true burn, which takes them completely out of supply as well. But that's the part of the space that I really enjoy. And I think it's got a bright future once the adoption takes place.
Love it. So Hamosi, you have spent, you've got a storied career. You're obviously, building what I think is a very cool product that I'm sure will evolve over time. And this is kind of phase one, getting your, planting your flag in the Web3 sphere and growing from there. But you have a lot of time that you've built and tech that you've built in the Web2 space, and now moving over to Web3. What's been kind of the biggest difference between, the Web2 and the Web3 development and community-wise as well?
Yeah, sure. Well, I mean, just that the most incredible experience I've had in crypto is around the nature of the community. So in Web2, when you're looking to raise capital or you're looking to find a development team, it's actually really difficult to find the right people. And it's certainly difficult to raise capital by finding the right investors that are looking for the particular protocol that you're looking to onboard them to. And so when it came to crypto, all these resources are just at your fingertips. You've got investors, you've got incredible developers, you've got a community that want to support what you're doing by buying in and really just taking charge of the marketing angle, getting on Twitter and talking to people about it. And that has been definitely the most exciting part of moving from Web 2 to Web 3 is just everything is at your fingertips, no matter where you are in the world too.
Yeah. And the one thing I find, as an entrepreneur in the space as well, is how many of what would be considered your competitors are actually your collaborators. That you have people that go like, look, I think what you're doing is very cool. I'm doing something that's, 90% similar. You need to fix this and this because we need you to be successful. Because if you have a problem, you're going to make me have problems. And so you end up, working jointly with people that traditionally in the Web 2, they would never speak. Terrible project. Web 3, we're all so early. We're going, please, everyone, like, let's fix your bridges. Let's fix your contracts, get your stuff audited. Hey, I did it for you myself. So I love that concept of really community. And a community can be anything. It can be a community for yWhales, which is what we have, or it can be a community around a DeFi protocol, like Diamond Swap. So I think it's very cool. Everyone can have their passions and bounce around wherever they want.
Cool. Yeah, I totally agree. And there's actually a really cool example of that. There's an OTC platform that's looking to launch shortly called GigaSwap. It's in the degen space. Great guys. I'm in a development group with him and we're just cheering them on. We certainly don't see them as competition. We just really want them to succeed because if they succeed, there's that consumer behavioral change that's already been adopted when we enter the market as well. So look, yeah, it's a great space to be in.
I love it. I love it. So as we head towards closing right now, let's talk about kind of a few things that are getting ready to happen. And so by the time this podcast comes out, you're probably going to be very close to your public launch. And you said the word earlier, V1 token. What is there a V2?
Yes. So we launched as a ETH rewards token. And this was before we'd basically determined whether the OTC protocol was worthy of the investment of building. But the old contract wasn't up to standards in terms of getting us on the exchanges, and so we need to simplify that. And so that's where V2 comes into play. So we're going to be launching a V2 token that will support the newly launched protocol at the end of the month. And that's the 5.5 tax, the max supply that I spoke to you about earlier. And then we'll release the tech about a week after that. So we'll generate the hype, get people interested, educate them with the tutorial videos, and then launch the tech and push it from there. So there is one opportunity actually I'd love to mention, is that we are doing holder testing. So our V1 holders are going to be testing the platform before we go live. So we're creating a pool for them to purchase from at a discount rate. And I'll be more than happy to create a pool for the yWhales group as well, if that was practical.
Let's make it happen. Easy. Cool. You kidding? A DeFi protocol that we're allowed
at the ground level
to break. I mean, yeah, that's like our dream come true. So no, that's fabulous.
Cool.
Fabulous. Well, Hamosi, so for anyone that's interested, as we bring this to close, where can they find you? Obviously, you guys have your website and everything else, but if you can just kind of run through where the community member can come find you to hang out.
Yeah, sure. So our community is on Telegram. And so all those links can be found on our website, which is diamondswap.co. And we're doing a lot of screenshots and videos and I guess educating the consumers on what's coming on Twitter as well. But again, head to diamondswap.co and all the information will be there.
Love it. yWhales, this is Hamosi with Diamond Swap. Looking forward to kind of learning more and also being able to utilize your protocol here soon. We will catch you guys next time.
Thank you.